Hello, everyone. Welcome to the introductory session for IB Business Management. And this is actually designed for both SL and HL students. So it doesn't matter if you're SL or HL. This will walk you through in terms of what you can expect for the winter crash course. It's a very short course, 3 weeks, unlike the summer crash courses, which is usually around 6 to 7 weeks. Which means we're going to be very, very time efficient. We're going to maximize each single session. There will be a back and forth of concept understanding and also problem solving sessions as well. So a little bit about myself before we dive in. My name is Steve. I've taught IB Business Management and Economics for over 5 years now, and I've taught students from different places, from different countries, of all different backgrounds. So I do understand that the students that will be coming in for this crash course would mostly be Korean students, but please be aware that the most key important thing I like to emphasize for this course is to understand what you're expected from IB and what are some of the ways that we can actually utilize to make sure that we don't deviate from the expectation of the IB. Okay, so, let's move on forward. Let's have a very short, quick overview of the syllabus. So what I tracked over here is the design syllabus for the HL students, but as I said, it doesn't differ a lot, okay? So for the SL students, obviously there's going to be slightly more focus on the concept understanding. And I understand that every different school have slightly different pace in terms of how much concept has been covered so far, okay? But for HL students, I hope that you have covered some of the HL topics, okay? And depending on if you're year 1 student or year 2 students, the level of concept I've covered so far might be different, okay? But for year 1 students, obviously, we'll go with a pace where we pick up from unit 1, and we'll try our best to cover up to at least to the end of unit 4 if we can. And for HL year 2 students, obviously, we'll focus more on each of the concepts and related questions, okay, that you guys will be solving next year, May. Okay, so the 3 things, okay, that would really sum up this course, okay, it's going to be short, okay, it's going to be concise, and it's going to be impactful. Okay, which means a lot of the concepts that we're going to delve into are going to be straight to the point, and there's going to be applicable real life examples to think from business owners' perspective. Okay, this is very important to think from business owners' perspective, because a lot of the concepts that we cover here, including organizational structure and environment, including finance and accounts unit, including the HR unit, a lot of them are required to think from a specific business related, well, most likely owner's perspective, right? To understand how to efficiently operate a business or a company, okay? And I would really like to emphasize the interactive and proactive engagement part here, okay? This is actually very, very important. I would expect students to engage every lesson, with confidence, but obviously with as much interaction as you can, okay, to go through some of the class discussions, especially for a lot of the case studies that we'll look at, some of the previously tested case studies from the IB, okay, that is a very, very important, I would say, learning time that every student must go through in order to do well in IB Business and Management, because it is a tricky course, okay? It does require a lot of, memorization and understanding of how a company works and how can a company operate in different forms and different sort of styles, okay? And all of that, the fastest sort of way to absorb all of these information that is all sort of intertwined together is through a fruitful discussion, okay? And discussions could be me asking you, what do you think about this specific scenario of this specific company? Okay. And really, encourage you guys to have your own sort of opinion and thought mechanism. And only in that way, okay, only in that way, you'll be able to approach the external assessments, okay? So, okay, let's now look at the EA, okay, walkthrough. So I think HL, SL, I think both the group should be familiar with the composition of the EA, okay? Paper 1, 2, 3 for the HLs and paper 1, 2 for the SLs. Okay, there are definitely overlapping styles in paper 1, 2, regardless if you're HR or SL. For paper 3, again, it's going to be slightly more technical for the HL students, but don't worry, okay? We'll utilize our time to get a taste on paper 3 as well, okay, for the HL students. And the weighting here, as you guys could all see, for HL students, you definitely need to make sure that you can do well on paper 3 because it is a 25% weightage, okay? So, you know, it gives you guys a slightly more leverage in terms of if you don't do particularly well in, let's say, paper 1 or paper 2, you still can make it up in paper 3, okay? Whereas for SL students, you know, there's really not much room for you to slack off too much for both paper 1 and 2 because each of them are weighted 35%, okay? So let's just keep that in mind. All right, so for today, because it's just a very short introductory video lesson and also just to give you a taste of what you can expect, and it's going to be different to when you attend a face-to-face lecture, okay? But yeah, let's look at this unit 3, which is under the finance and account. And I'm just going to quickly give you guys a taste of what I believe is one of the most important concepts to understand, which is to understand what are financial statements, okay? So the definition, it varies on different dictionaries, but you know, in the most simplest form, right, you can call it as mandatory financial reports required by the financial regulators, okay? So when it says regulators here, it really depends on which country that you reside in, right? So in the US, we call them the SEC. You know, in Korea, we have our own sort of regulatory institutions that take care and regulate this type of things, okay? And for the purpose of providing transparent and concise information, right, to the public investors. So investors here refers to, you know, it could be you or me, right? It could be anyone, you know, that's eligible to trade in the stock market, okay? And shareholders of a listed company, okay? So I hope that whoever is tuning in to this video should have heard of the term shareholder and listed company, okay, at this stage. And the shareholder, okay, just give you a little bit of refresher. Shareholder, in Korean, we call this juju, right? Or, you know, another way, the simplest way of saying is whoever that has, you know, let's say share of a company, okay? So what do we really mean by share here? Well, simplest way to think about share is ownership, okay? Ownership. So if you own, let's say 5 shares of a company, so you have a bit of a percentage ownership in that company, okay? Although it's going likely to be a very, very, very small percentage, maybe like 0.0000001, okay? And listed company, right? So listed company, there's 2 different types, right? The company could either be listed company or unlisted company. So listed company, which means the company is traded on stock exchange, okay? So every country have their own stock exchange, right? Well, at least the big countries do, right? In the US, we have the NASDAQ, right? Or we have the you know, like all these different trade exchanges, right? The New York Stock Exchange that trades NASDAQ or S&P 500, etc., right? Whereas in Korea, we have you know, KOSPI or KOSDAQ. Those indexes trade on the Korean exchange market. Okay, so a company they have a choice to whether to become a listed company or not. But one thing to note here that if a company is unlisted, right, they are not required to provide financial reports or the financial statements to the public. Okay, so Okay, financial statements, let's just have a very, very simple version of breakdown just to give a brief idea. Okay, so financial statements, on a sort of a simplicity sake, okay, we can categorize the financial statement into three big statements, right? Usually, if we go in a little bit more professional sense, there are other, less important form of statements that are prepared, but let's just focus on the syllabus. So we need to know what is balance sheet, okay? Balance sheet. And we also need to know what is income statement. Some of the textbook would call it the profit and loss account. And also there is cash flow statement, okay? Okay, so for those that's hearing this for the first time, right, you might think, what are these for? Okay, so balance sheet, income statement, cash flow statement, they're all separate form of, let's say, documents, right, that has to be, let's say, prepared by a listed company, right? And each of the statement have different purpose and also have different sort of usage, okay? But they're all very, very important, okay, to reflect some useful information of a company. Okay, so balance sheet, what does it show? It's a snapshot. It's a snapshot of companies' assets and liabilities and equities as well. Okay, so if you're first time, learning about financial statements or the whole unit in general, you might not get a sense of what is assets and what is liabilities and what is equities, right? So assets is anything that the company owns, right? So if a company let's say owns a machine, that is an asset, right? If a company owns a factory, that's an asset, right? And let's say cash, right, or any cash equivalent items, right? They're all under company's assets. Liabilities, right? So liabilities, simply put, is what the company owes, right? So asset, okay, asset, you can simply treat it as what the company owns. And liabilities is something that the company owes, okay? So if company, let's say, have some sort of a loan outstanding from a bank, right? So that goes under liabilities, okay? So then you can actually have some sort of a general idea, right? So if you have a snapshot of the company's assets and liabilities, I won't go in too much with equities here just to make things simple. Okay, so then you can actually see if this company owns more stuff or owes more stuff. Okay, so if you subtract, let's say, from the total asset, right, and you subtract total liabilities, right, then you get this thing called working capital. Okay, working capital. So what does this mean? So if you, let's say that using all of your assets and you pay off all of your, liabilities, things that you owe to other banks or, companies or whatever, and the remaining, if it's remaining, right? Let's say there's a positive figure remaining in a dollar amount, then this working capital, right, is what could be used to, let's say, enhance the operation or invest back to the company, right? But obviously, if this figure is negative, well, then that's not a good sort of indication, right? Because if a company owes more stuff than what they own, it doesn't look very stable, okay? And let's look at income statement, right? So in income statement, typically what we want to show is the operation, right? Operation, right? Performance. Okay, so simply put, right? So the first line of an income statement is sales, okay? Or you can also call it revenues. And then what we want to do here is we just want to subtract, right, what we earned, right, by all the expenses, right? All the expenses, and there could also be taxes, and there could also be like interest that you pay, right? And etc. Right? And then you have the final item as net income, okay? Or you can also call it profits if you want to. Okay, it depends on the textbook, right? But they essentially mean the same thing. All right, so then what can we see or what can we gain from looking at a company's income statement, right? You can gain an understanding of, let's say, okay, so let's say that the company's sales figure is, let's say, 1,000, right? Okay, and it doesn't look so bad, right? Let's say the company made 1,000 for that year, right? Let's say that their net income or net profit is, let's say, 5. Okay. Yeah. So then it's very obvious that although the sale number was 1,000, if they ended up with net income of 5, there must have been a significant incurrence of cost, or let's say expenses, right? So by looking at the income statement, we can actually know where, let's say, in terms of the operation procedure, or let's say the operation mechanism wise, is this company really operating in an efficient manner, right? So that's what the income statement usually provide in terms of information. And cash flow statement, this one is slightly more tricky because it's more based on assuming you have an understanding of balance sheet and income statement. Okay. But in a cash flow statement, we just want to see the inflow versus outflow. Okay. Outflow of what? Of cash. Okay. Of cash. So if you look at, the cash flow statement, you'll see different sections, right? You'll see the cash flow from operations. You also see cash flow from financing activities, and you also see cash flow from investing activities and such, right? And there's different items going to different sort of sub accounts here, okay? But one of the things that we need to pay attention to is that, what does this provide in terms of knowledge that we need? Well, think about it this way, right? So you get some sort of figure, right, in terms of indicating what the company actually earned. Let's say net income here is 5, okay? But if you actually study the income statement in the more detail, you understand that not all of the expenses listed in the income statement are cash transactions, okay? So what I mean by that, let's say, a company recorded a sale, okay? And perhaps not all customers pay in cash, right? Some customers could pay in credit cards, right? So although there was a transaction recorded, and I'm sure that, the company would get the money from the credit card company eventually, but there was no cash involved there, okay? So that is a non-cash transaction, right? So in the cash flow statement, what we just want to do here is to make sure we do all these non-cash transaction adjustments, okay? And to only look at cash specific transactions and want to see how much cash flowed in and how much cash actually flowed out. Okay. So in the very last item, you have ending cash. Okay. So this would be the final amount of cash, right? It could be negative or it could be positive, right? That the company incurred throughout that year. Okay. So all of this information and all of these different statements, it does take several sort of attempt to understand it, to get an actual grasp, okay? But now I'm just going to give you a very, very simple understanding, okay? So during our face-to-face lectures, obviously, I'm going to show you real-life examples of financial statements from a known company, and we will study in terms of like what kind of information we can derive from these financial statements, okay? So hopefully that wasn't too hard. Okay, so now let's move on, okay? And right, so continue to discuss, right? What are the usage of financial statements then in a more of a real life situation, right? So we can use financial statements to read a specific trend, right? It could be, let's say, what is the 5-year trend of the revenue, or of, it could be, let's say, Samsung, for example, right? So you have financial statements every year, right? And if you put the, let's say, financial statements from 2018 to 2023, right? Then each year's, let's say, income statement would have a revenue figure, okay? So then you can actually determine if there is a, uptrend or if there's a downtrend, okay? So let's say from 2018 to 2023, okay? Let's say the revenue, we're looking at revenue here. Let's say the number was, 10, 12, 14, 16, okay? So from 10 to all the way to 16, we can see that there isn't actually an upward trend, okay? Right? And it could be vice versa, right? There's also could be a downward trend, right? So we can actually derive some useful information here, right? So, from an investor's perspective, you're looking at these figures and you would say, oh, okay, so the revenue is declining here, so downtrend. maybe there's something going on, right? Maybe, let's say the company is facing some sort of a financial difficulty, or, there's been some sort of an incident that impacted the sales, right, throughout the years, right? So things like that. Okay. And second thing, right, we can also use financial statements for the sake of future forecast, right? So for example, right, what would be the forecasted market share? So market share is the percentage that the company, let's say, not necessarily owns, but the presence of that company, right, within a specific industry, okay, based on historical performance, right? So let's say the company's current market share equals to, let's say, 30%, okay? And we want to look at the trend. Let's say we connect with the previous example here, the trend. Let's say that we saw an upward trend here, okay? So and all of these are, historical numbers, right? Because they occurred before the present time. So based on these trend analysis or, previous figures analysis, we can make a probable guess, or let's say probable forecast, right, that the market share would increase, right, in the next couple of years, right? So in the 2 years time, maybe the market share could increase to 35%, assuming that the upward trend of the revenue is maintained, okay? And thirdly, comparative analysis. So this is also very, very important, right? So how is the company performing compared to peers in the same industry? So you all probably have heard of things called peers, right? Which means similar companies within the similar industry, okay? And in order to have an objective, let's say, evaluation of performance, okay, we need to have a certain benchmark or certain standard that we can compare to, okay? So if all the companies, right, under the regulation required to prepare financial statements based on the same guidance, well, then it makes a lot easier to compare with, let's say, company A and company B and company C, right? Okay. So then they will all have their own financial statements, right? And you'll be able to have an apple-to-apple comparison, right? Because they're all required to prepare financial statements, right? So let's say that the industry average of, it could be anything, right? Let's say the industry average of, let's say, okay, so let's say that industry average of a certain ratio, right? Let's say the industry average of the current ratio, okay? It's okay if you don't know what current ratio is for as of now, okay? But let's just say, so current ratio basically just measures, the liquidity, right, of a company, right? So let's say the industry average of the current ratio is, let's say, 1.5, okay? So using this meaningful figure here, we can actually determine if we're actually aligned with the industry, we're doing better than the industry average, or we're actually, performing below the industry average. So it's very useful in that sense. And even in the real life, we actually do use a lot of these meaningful application, right, of financial statements to derive a meaningful analysis. And these are some of the things that the IB wants the students to learn, right, over the course of 2 years. Okay, so yeah, I think that was a very quick introduction of our course, and a small pre-tasting, right, of what you can expect. But I can assure you that in the face-to-face sessions, it will be a lot more interactive. There will be a lot more proactive discussions to help you understand, and it'll be a lot easier for you to raise your hand and ask questions as well. Okay, so let's leave it here for now. Thank you for tuning in, and I really hope to see you in the winter crash course. Okay, bye-bye.